In high definition, this is News Channel 5, where the news comes first.
Well, time to talk money with financial analyst Chad Slagle from Slagle Financial. Thanks for joining us, Chad.
Thank you very much for having me.
So things have been pretty good for U.S. investors lately, and we've seen some gains. Do you think these gains will continue into the next quarter?
Well, there have been some good gains. Of course, the markets are highest they have been since 2007. I mean, 100 of the S&P 500 stocks are at or near all-time highs, which is a very good thing. The problem is there's a lot of what-ifs in the economy right now. I mean, if you look at our national debt, we're, $16 trillion in debt here. Just a couple weeks ago, we went over that number. And there's a lot of what-ifs in the market as far as Bernanke and his team's supposed to come out tomorrow, could come out with some quantitative easing. QE3 is what they're calling that. It could or could not come out, so that's a what-if. But if it does not come out, I think a lot of investors are using that QE3 as a false sense of security in that they feel, hey, once the market goes down, they're going to jump in, they're going to prop it back up, so I can take a little more risk with my portfolio. So, again, we don't know exactly what's going to happen with the market. There are a lot of what-ifs right now.
And so you've got people who might be watching right now who you know, are getting close to retiring, and because of all these ifs and because the economy is so iffy, what is your suggestion?
Well, I mean, if you look at the old rule of thumb, buy low, sell high, as I just said, the markets are at high since 2007, 100 of the S&P 500 stocks. Even if you're not retired, now may be some time to harvest some of those gains. Take some of those gains off the table, put the cash on the sideline, wait for the market to correct itself, because eventually it will have to correct itself, and when it does, jump back in, especially if you're retired or getting ready to retire here in the next year or two. Also, if you are retiring or already retired, you have to look at what are your concerns that you have right now. Do you need income off of those investments to live off of? Where can that income from? And that all comes back to building a game plan, sitting down with an advisor, figuring out your risk tolerance, your income needs, your lifestyle goals, and building a game plan that's going to last throughout the rest of your life, regardless of what's going to happen in the market, regardless of all the what-ifs.
So, Chad, we've talked about the older population with retirement in mind.
Yes, sir.
What about young people? I'm sure you get young people come in, they have no idea about money, they want to start somewhere. What do you tell them? The
biggest thing is what you just said. Start somewhere. Start putting some money to the side, whether it be a $50 or $100. And like I said, right now, if you've made some good gains, a lot of younger individuals, maybe they put some money into Apple. Apple's a wonderful stock, it's done very good. Maybe we take some of those gains off the table, keep some of that stock, and hopefully it does go up. So, but the thing I would go back to is put some money in the market. It doesn't matter if it's even $50, $500, whatever it is, put money away for your future.
Because money grows, and that's what kids need to learn. I try to teach my kids that you put some money in, it'll grow. It's like a snowball, and eventually,
absolutely correct. Yes,
you're
sir.
a multimillionaire eventually.
That's
in
right.
just a couple of years. No, maybe not quite that easy. Chad Slagle with Slagle Financial. Thank you for joining us today.
Thank you very much.